Do not do that payday loan. Do not go to a loan shark. Just watch this video. In this video, we are going to discuss how to get a credit card or a loan with bad credit without a cosigner. I will talk about all of your options, where you should go, what questions to ask, literally everything to do. Let's get into it. All right, so if you have challenged credit or no credit at all, I already know you know the struggle. It's important to understand this. There will be somebody out there that's willing to give you money, but please know they normally do not have your best interest at heart. That's why you came to this video. These companies will have the upper hand, so there will be fees. The fees will be ugly. The interest rates will be ugly. And there will be things that they will do to limit you, so please, again, watch the whole video so you can see what your best approach should be depending on your situation. But first of all, I gotta ask this. What are you trying to do with this personal loan? All right, if you're trying to go buy something that you don't need, if you're not trying to do something like pay off debt or get into a business that you have already researched and you know that you will be making money, watch my other videos. I don't know, click this one. But please do not go and use this information to get yourself in a worse financial position, right? We are looking to go on the up. All right, so I know we live in the technology age and we want to do everything online, but it would really help to kind of get out of your house, you know, clear your throat. I know you haven't talked because you've been on social media, but go out there and actually go into a bank or go into a credit union. You will find much better success in there because you are now working with computer algorithms. When you are applying for loans or credit cards online, they take the information that you have inserted, they do some sort of magic behind the computer, and then the computer spits out approved or disapproved or declined. I don't know. You know what I mean. So you are really missing that one-on-one interaction with somebody who is a professional who can actually assess your situation before you go ahead and get your credit pulled, because that will make your credit even worse. So please make sure that if you are applying for these things online, it's because you know you have a solid setup, right? You have a good credit score, you have good income. If you know those things are challenged, do yourself a favor and go in person. When you're in person, not only do you get the benefit of actually talking to somebody face to face, they can do what's called a pre-qualification. There's pre-qualification and there's pre-approval, and obviously you're approved and underwritten. When you get pre-qualified, you are providing truthful, right? The correct information based on what you know, your credit score, your income, and based on the information that you give them, they will let you know the likelihood of you getting approved. If that likelihood is high, then you can go ahead and actually apply. If you are going inside a bank or a credit union, a lot of times they actually have people who underwrite these things manually. And when I say underwrite, I mean they're the person who's collecting all of your data and determining whether you get approved or not. So that's another benefit of actually going in there, because you can really make your case. You can't convince a computer that you need a loan. Apple, listen to me. I really need to consolidate my debt. It just doesn't work that way, right? When you actually try to get pre-qualified, that allows you to comfortably shop around without having to have your credit actually pulled. And I say shop around because different companies will offer you different things. There might be one company that tells you, hell no, and another company that will say, yes, but. So you want to make sure you're shopping around to get the lowest interest rate, if possible, you know, a payment plan that actually suits your needs, that will fit into your budget, because you're budgeting, right? And a situation that will make sense financially, because like I said, if you're consolidating your debt, you should be able to be paying less interest, a more comfortable payment plan, and get out of debt quicker. It really is important to make sure you're going in there with your information. So you'll need to have maybe your W-2s or your pay stub. Check your credit score before you actually get in there. Don't use Credit Karma, because most lenders do not use Credit Karma's system, which is the Vantage score. They use the FICO score. So Discover, if you go on Discover's website, they actually allow you for free, even if you don't have a Discover card, to check your FICO score. So that's a really great resource. And a lot of these banks also offer your FICO score. You have to just kind of ask and see what they're offering for free, but get an idea of what that is before you walk in there, so you look prepared. And like I said, you have to be educated. So do not just pop up at the first place and accept anything that they give you, because they will give you crazy interest rates. I will list some companies at the end of this video that you probably should avoid, because they will either be very unreasonable, hard to work with, or charge you astronomical interest rates that you do not deserve. Like I mentioned, this video is supposed to be focused on people who cannot get a cosigner. Maybe you don't have anybody who would say, yeah, you know what, if you don't pay that, I got you. But maybe you have somebody that wouldn't mind helping you, and then you can leverage off of their good spending habits and their good credit. So you would do what is called becoming an authorized signer on one of these person's credit cards, right? Let's say you know somebody who has good credit. They would like to help you out, but they don't want to be on the line for your mistakes or your slip ups. And if you don't want to pay, they don't want to be responsible for that because they don't want to ruin their credit score. What they can do instead, that's the best of both worlds, is still help you out, but not have to actually be responsible for anything that you get yourself into, and allow you to build your credit. Sounds too good to be true, but it's not. When you become an authorized signer, what they will do is they will put you on their credit card. So you get to get all that juicy, great on-time, 100% on-time payments, the length of their credit, and that will, as long as they are responsible with their credit cards, that will boost your credit score. Now, when they make you an authorized signer, they do not have to give you the credit card. They can sign you up, get your name on there, and then when the credit card comes in, they just keep it. Now, if you let that kind of just stay on your credit, that will boost your credit score, and then you can actually be able to apply for these loans with a better credit score, with more credit history, and then that would allow you to get better interest rates and something that actually is more suited to your needs. So convince somebody to do that for you, because that is a almost surefire way to improve your credit score and, like I said, reap the benefits of debt consolidation or whatever you're trying to work on. So what are your options? Because like I said, I think you should definitely run for the hills if you see a loan shark, and you should avoid payday loans because you don't want to spend before you get. So there's options like secured personal loans, where if you do have bad credit but you do have an asset, let's say you have a car that is paid off, you can do something called a secured loan, or maybe you'll hear it be called a title loan. And that's where if you don't pay the loan, they can jack your car or your house, whatever asset that you have, they will underwrite it so that they would have access to that asset in the event that you don't pay. Obviously, that's very risky. If you know you're the type to not pay, I'm not liable. But when you actually have collateral, it makes people more comfortable to actually loan you money because you have some skin in the game. You have something to lose. It's not only them potentially losing out on thousands of dollars, it's you losing out on your ride. If you are a homeowner, I'm sure you know what what the equity in your house is. So if you have seen some appreciation in your home, you can do a HELOC, which is a home equity line of credit, basically a jumbo credit card. Again, everybody's situation is different, so I almost hesitate suggesting this, but you could definitely tap into some of that equity if you are looking to improve your financial situation. I cannot say this enough because I don't want people making the wrong mistakes out here. But if you do have that equity in your home, you could consolidate your debt and have it wrapped up into your home. Another reason why people would be more willing to give you a loan is because you have collateral. I mean, it's your house, so you have skin in the game. The only thing about this is that there are fees associated with this. You obviously have an interest rate which will be probably higher than your current mortgage interest rate. There's appraisal fees and maybe annual fees, so you have to kind of really ask a lot of questions to your lender and see if that makes sense financially before you just jump in head first. 401k loans, obviously not the best, but if you have watched my video up here about net worth and retiring, we do talk about, depending on what stage you are financially, if it makes sense to focus on paying down your debt or building up your investments. So if you find yourself having maybe a couple of tens of thousands of dollars in your 401k, but you also have $20,000 in credit card loans, it would make sense to get a 401k loan, because the interest that you pay on your loan is paid to yourself. Sounds good to me. Then you can actually pay off your credit card debt. Because with your 401k, typically you might have some really good years where you're making double-digit returns, but on average you would probably be somewhere around 7-8%. Whereas credit cards are absolutely in the double digits. So if you have a lot of money just sitting in the 401k, not only is your money at risk because you don't know what's gonna happen in the market, but you're also really doing yourself a disservice because there is a guaranteed way to make money, or at least save money, because you're paying down that debt. So you know for sure if you have 15% of credit card interest, if you pay that off, you for sure have saved yourself 15%. Whereas if your 401k grows, you don't really know for a fact where that's going to be in the next year. It might go down to zero for all we know. So yes, it's normally advised against, but if it's going to put you in a better financial position, go for it. Peer-to-peer lending is another option where maybe banks will say, sorry, good luck with that. There might be randoms in the internet willing to give you some money for a return. Lending club is something that I have seen people use personally, so I know it's legitimate. I know that you can actually get in there and use it. Definitely look into that. Read. Do not just, I have read these terms and conditions. You lying. You know you ain't read it. Take your time and read it, because when you are getting into things like this, you really don't know what you're signing, and you don't want to end up in a bad position if there was some sort of stipulation in there that you didn't read. And don't come back to this video. Lending club is just one example, but there are others, so go ahead and take a look on the internet and see what you find. Payday alternative loans. Now these are loans that normally credit unions offer, and credit unions do have better interest rates because they are non-profit. They have to reinvest that money back into their company, so they normally do that with lower interest rates and kind of help the members of the credit union. Some companies that I've seen that you might need to just double check, because I've seen mixed reviews but it's been mostly negative, is One Main Financial. So if you were looking into doing this, put the pause on it. Definitely check, because I have seen some very negative reviews. It wasn't my reviews. I don't want to get sued, but do your due diligence. Another one is Cash USA, and if you have had any experiences with these things, help a play out in the comments and put it down below. Have you found any good companies that were willing to work with you? But these companies, I felt from the internet, it was a hard no. All right, that does it. If you like this video, then please like this video, give it a thumbs up, give it a thumbs down. There's no such thing as bad publicity. But if you did like it, you know what to do. Binge watch me. And if you gotta go, it's all right. I'll see you next time. And until then, keep your money up.